Yesterday, we were busting out our S&P 3000 hat on this show. Today, it's another milestone for the markets. Dow 27,000 right now, sitting just about 27 points above that. Rate cut euphoria still propelling the markets with the Dow touching that new, never before seen record. This time, as Fed Chair Jerome Powell testifies on Capitol Hill for a second day. Myles, we are seeing the S&P and NASDAQ, and we're pairing the gains here a little bit. What's going on?
Let's talk about the People's Index. It's the only one that really matters. I love this debate because it comes up and the market scolds get all like, oh, who cares about the Dow? It's in points. It's, price weighted. That's stupid. Trump knows. People love the Dow, and above 27,000, it's a big number. I think that it's going to stick is exciting. And look, we can all kind of say, well, this, that, the other. The reality is the market is pretty much at record highs. The economy is doing okay, not as well as it was last year. The Fed, for some reason, feels it needs to cut rates right now. They very well outlined that. And, milestone.
Milestone.
And I think, again, though, I just think Trump getting on there today, tweeting about Dow 27,000, bragging about the stock market once again, it shows that, for all of the attendant problems with the things that he does as an actual politician, he gets the psychology of what people are thinking about. Normal people know what the Dow Jones is. I don't think normal people know what the S&P is. So I think it's significant that we have record highs for the Dow.
I would say normal people probably don't know how the Dow is different than the S&P, and it doesn't matter.
Doesn't matter.
One reason, though, that the Dow is doing so well, and it also ties into President Trump, is United Healthcare. It's a $260 stock, so a 5% move on there. It was like, bam, off to the races.
Ivy League Jen Rogers over here, Andy.
Right.
And that has to do, though, with what's happened out of Washington, what we're seeing on the rebates having to do with the pharmacy benefit managers. So the healthcare names winning, like United Health. Then on the laggard side, we have Merck. Now, Merck is down. The pharmacy companies were the only ones that like the idea of getting rid of the rebates, but Merck is only an $80 stock. So
yeah, well,
there you go.
As you suggest, though, Jen, a lot of this is lost on a lot of us. And so I think Myles is, of course, right. When people say the market, they mean the Dow Jones Industrial Average for most people. So, it is a record high, not a new record high, Myles.
That's right. That's right. You corrected me on that. Yep.
A record high now. But, I think that what strikes me today is how easy all this seems to be for Jay Powell. And I wouldn't be so comfortable. And I'm just surprised that he's not more uncomfortable with what's going on here, because to me, and it's not just President Trump, it is the U.S. stock market is holding our Fed chair hostage. And the market is saying, market's just going up and saying, you better cut because we're way up here and we're going to punish you if you don't. We are going to punish you, and the president's going to call you out. If you don't cut rates, we're going to crash on you, and it's going to be all your fault, and President Trump is going to take you to the woodshed. And, then, on the other hand, you have to cut rates when, to my mind, and if I read between your lines, Myles, you got to cut rates when you probably shouldn't be.
That's how
I think the economic case for cutting rates is quite weak, but the Fed has outlined why they are making the case.
Right.
But isn't the stock market the greatest leading economic indicator that we have, Brian Sozzi? And look what it's telling us.
It seems completely disconnected from reality, because you look at companies like a Fastenal, a FedEx, an MSC Industrial company this week. Not only were they trying to pass through price increases because of the trade war, they've seen demand take a step down because of those price increases. So their costs are being hit, their sales are being hit, their profits are being hit, and the outlooks are also being not hit just a little bit, but significantly. And the market is ignoring all of this.
Well, I'll tell you though, Sal, to that point, we discussed this a couple days ago. It'd be interesting to see how second quarter earnings evolves, because if you go back in time to what we saw in April and then also the beginning of the year in January, the market ignored bad news. Apple in January 2nd, really the last time that macro news from a company moved the market overall.
You know what's interesting too, just quickly, you guys, is it's sort of like there's a disconnect between the B2B economy and the B2C economy. I think the B2C economy is much stronger, right?
That's
so
right.
The closer you're connected to the consumer, the better you're doing. We saw the Delta CEO today on Yahoo Finance, Ed Bastian, talking about how business is great. That's a B2C business. So let's look at that as we go through the show. They'll come up again. You'll see.